everyone. My name is Annie Blickland. I'm here in Bangkok with Dr. Sean Guest, President and CEO of Valeura Energy. Hi, Sean.
Hi, Annie. It's good to be back with you here.
Sean, the company has had several announcements over the last couple of weeks, all of them very positive developments. There are three things that stand out in particular: completion of your corporate reorganization, share buybacks, and strong production numbers. Can you summarize for us what the corporate reorganization is all about?
Yeah, sure. If we think back to a couple of years ago when we bought the two companies here in Thailand, we bought the assets of Chris Energy out of receivership, and we bought the producing assets Mubadala. And in doing the two separate deals, we created this almost dual stream of companies up to the parent. So what we've done now is collapse that into a single subsidiary organization. But most importantly, what happened here in Thailand was we brought the three fields that were under the Thai 3 fiscal terms, we brought them into a single company. Right, so you can see now that that'll create some synergies and efficiencies as we go forward for those three fields: procurement, logistics, how we operate. And if we look out into the future, it's also that, well, if one field is being abandoned, then actually those costs can go against the other field, so it creates that tax efficiency. But the most important thing is, if we look at where we are today, there's about 400 million US in tax losses in that company. So that now all of those three fields get to benefit from that, and that'll create about an extra 200 million in cash flow in the near term. So I'll just say that again. That'll create an extra 200 million in cash flow. So when you look at our current balance sheet of 156 million in cash, no debt, we already had very good cash flow. This is just supercharging us and really giving us the opportunities to look at how we deploy that capital. So first off, we're looking at reinvestment into our assets here in Thailand. We can also look at doing new business here in Thailand or in the region. And finally, we're looking at some return of capital to shareholders.
Yes, on returns to shareholders, you've also announced the start of share buybacks. Why has the company decided to buy back some of its outstanding shares, and what does it mean for shareholders?
Yeah, management looked at this, and their view was, and then we also got advisors' advice, that really for a company our size, the best way to return some capital to shareholders was through a share buyback. So we announced last week we have approval from the Toronto Stock Exchange to buy back about 7.5 million shares over the next year. So when we buy back those shares are canceled. So the company is therefore reducing the number of shares, assuming the same value. Each one of the shares goes up in value. But really, the messaging we'd like to get out to people is, we see that the Valeura shares are a very good investment at this current price. So whether we're buying them or other people are buying them, they represent a good investment.
So does shifting to a shareholder returns model mean you are no longer pursuing growth?
No, not at all. And we really want to make this clear to people, is that we really have sufficient cash flow now to be looking at all these opportunities. And that's why the timing of the share buyback came right after the corporate restructuring, because we demonstrated that we had that supercharged cash flow, and now we have the ability to do all of these. So again, emphasizing 156 million in cash and no debt, very strong near-term cash flow. We can buy an asset of very significant magnitude here in Asia, while at the same time offering these returns to shareholders.
And the other thing that stands out from recent announcement is production. When we last spoke, the company was drilling on Nong Yao C development, and that has since come online. You announced the production since September, and October has increased to 26.4 thousand barrels per day. Is that rate sustainable? And what should viewers expect to see in the near terms?
Yeah, so Nong Yao C was really our production growth project that we were doing this year. And hats off to the team here in Thailand. They delivered that under budget with very good drilling performance and delivered that project safely. So that field has now gone up in production about 60% from where it was earlier this year, and in fact is delivering about half of our production in country. Now, the important thing to point out as well with Nong Yao is it is really our most profitable field. And we have an OPEX in that field that's down around, I think, just under $15 a barrel right now. In addition, we just finished a 5-well drilling campaign on Jasmine. All of the wells were successful, and that's really offsetting the natural declines in the field. So when you bring the Nong Yao C development, the Jasmine together, that's why we're maintaining such a good production, about 26,000 barrels a day. And we expect that to be the average for about Q4. So really good performance from all of the fields. And then with that production, we should come around right on the mid-case of our production guidance for the full year of 24.
So what next for the company? Any hints on what to watch for 2025?
Yeah. So operationally, the drill rig has just left Jasmine and it's moved over to the Menorah field where it's going to drill 5 wells. 2 of those actually have quite interesting appraisal objectives that we'll be following. But when you look at key news flow for us, early in January we'll actually release our year-end, our quarter-end results. Watch for the cash flow, the cash numbers there. We think it's going to be a very good quarter for us. And definitely increase above the 156 million we currently have. At the same time, we'll release our guidance. Now, we talked about production a minute ago. While for 24, we're coming in right on the average, the production has been weighted right to the end of Q4. So we expect to go into 2025 with a higher production and have an expectation for 25 above the analyst guidance on that. So that should be good numbers. Reserves. Now in mid-February, we'll release our reserve report. This has been a focus for us since we took over the company, increasing the reserves and reducing the abandonment cost. We saw in 2023 that we actually were able to more than double replace the amount of reserves that we actually produced, and we reduced abandonment about 30%. With the studies that have been ongoing this year, with the new wells that have been drilled, we're looking at another really good number we see for year-end 2024. And really the final thing I'll point out is Wassana redevelopment. This has been a project that's been ongoing. This is a field that when we took it over had 4.7 million barrels of reserves. Last year we reported about 13 million barrels of reserves, and we now are looking at a redevelopment of that field that can take production there out to not, early 2030s. We think will be mid 2030s or even towards 2040s. So it's a very exciting time, and look for that kind of final investment decision on Wassana field, likely about the end of Q1 next year. So you look at the next few months, we've got a lot of good news flow coming.
Yeah, it's an exciting story, and I know the team are all proud to be part of this team. Sean, thank you for taking time to speak with me today. And thank you to everyone who tuned in to once again watch us. ขอบคุณค่ะ
ขอบคุณ